In this section, we're going to go briefly over the types of audits. And the type of audit is determined by the complexity of the tax return, the amount of information that needs to be covered in the audit, and the cost factor involved. For example, it costs the government money to hire these auditors. So they're not necessarily going to go on a field audit, which we will go over in this chapter, for a possible tax collection of $12. They would most likely send you a correspondence letter. We will go over this in this chapter as well. And the most common audit is the correspondence audit. And this is basically sent through the mail from the IRS to the taxpayer. And they account for over 75% of IRS audits. The IRS will send a letter questioning one or more items on your tax return. A lot of the times the taxpayer has made a mathematical error, and the IRS will simply send a letter stating that an error was made and that the taxpayer either owes money or in fact they are owed money by the government. It goes both ways. You may be asked to send supporting documentation for specific items. If you go to the IRS's own website at irs.gov, you can see all the various notices you may be sent. And what we were just talking about, the changes in the return, you would be sent a notice labeled CP11. We have made changes to your return because we believe there's a miscalculation. And this notice will state what you need to do. You may have to pay an amount owed by the date on a notice payment coupon. You must make the payment arrangements if you can't pay the full amount you owe. You must contact the IRS within 60 days of the date of your notice if you disagree with the change they have made. You must also correct a copy of the tax return that you have kept for your records. So this would be an audit that is simply done by correspondence, by the mail. You'll receive a letter such as this, and you will respond to it. You will either agree with it or you will appeal it. In most cases, the amount due is not substantial, and it is typically easier and far more economical to pay than to appeal the IRS's conclusion. In terms of the types of audit, this is the least worrisome. The next type of audit and the next level in severity is the office audit. And this means you will be asked to appear at the tax examiner's office to review your return. For an office audit, you will first receive a letter from the IRS telling you where to report and when. You will then be able to confirm the meeting or, if necessary, inform the IRS that you cannot make this meeting and set up a more appropriate meeting time. This type of audit is designed to review various key items in question on your tax return. The auditor may be looking for a more detailed explanation, complete with documentation to support your claims. The IRS has 3 years from the due date of a return or when a return is filed to examine a return. The time can be extended if the IRS believes that deductions were fraudulent. The letter that you receive for an office audit will inform you as to what documentation you should bring with you to the meeting. Typically, the audit will only focus on 1 year. If the audit covers more than 1 year, you should be informed in advance. If you do not have the necessary documentation by the meeting date, you can send supporting documentation after the meeting within a set amount of time. Office audits are a little scarier compared to a correspondence audit. It's quite different to sit in a desk adjacent to an auditor. A lot of people hire tax professionals to come with them to deal with the auditor themselves. And this is up to you, and we go over in other chapters about hiring tax professionals to join you on the audit and help you with the audit. But if you can produce adequate documentation to support your claims, you will come out of the audit just fine. Just breathe. The next audit will put the fear in anyone's back is a field audit, and that's when the IRS agent comes to visit you. And remember, with the cost advantage, it costs the IRS money to pay these auditors. They are not going to waste their time. The good thing is field audits only account for roughly 15% of all audits and are most common for businesses than for individuals. But if you are self-employed, earning over $100,000, you may find yourself subject to a field audit. You may choose to hire a tax professional or the person that you have paid to file a return to accompany you as the audit progresses. If you have a home business, you may not want the auditor to come to your home, so you can agree on meeting in a neutral location, such as renting a reception room in a bank or your tax preparer's office. In the letter you receive for this audit will be a listing of the documentation you will need for the audit, along with phone numbers for rescheduling the event if you need to. Another type of audit is a random audit, and this was reinstated in 2007 due to the discrepancy of money owed the IRS and what was being collected. This consists of a mere 13,000 audits a year, so it's a very small percentage, so it's not something to worry about. Also, since the person who is going to be audited is chosen randomly, there's no reason for the audit, so there is nothing to be fearful of. There's no reason for it. It's just like being chosen. Unfortunately, it's a roulette wheel in which if your number gets called, you get audited. So be mindful that you're not a criminal. There is no suspicion. It's just that you have some bad luck to be chosen for the audit. In the letter you will receive, you will be informed of what documentation you should have on hand. A recommendation is to not talk too much. Only give them what they ask for. After all, they do not know anything's wrong with your return. It's a random return. So don't volunteer any information. You do not want to open unnecessary doors to things that you do not want to unnecessarily have to deal with. Next audit type is a very scary audit type, and that is a criminal investigation audit. And the IRS will conduct this audit if they are concerned about the possibility of illegal activities. The IRS Criminal Investigation Unit employs 4,500 people who are stationed around the world, and they investigate criminal violations of the Internal Revenue Code, which can include such crimes as money laundering and other various types of fraud. The IRS's Criminal Investigation Unit has a high success rate of getting convictions. So it's a very scary affair. So these are the type of audits going in severity.